What is going on, everyone, and welcome back to the channel. Today, we're diving into something absolutely wild that's been sending shockwaves through the financial world. We're talking about a potential emergency meeting triggered by a massive spike in the silver market. Picture this. Silver, the metal that's been quietly simmering for years, suddenly explodes to $80 an ounce. It sounds like science fiction, but the conditions are aligning in a way that makes this scenario more plausible than ever. So what's really happening? Is this just market noise, or are we on the brink of a historic silver squeeze that could change everything? Stick with me, because we're going to break down the catalysts, the players involved, and what this could mean for your portfolio. This isn't just about a metal. It's about a potential seismic shift in global finance. First, let's set the stage. For years, many analysts have called silver the most undervalued asset on the planet. It's not just a precious metal, it's a critical industrial component. It's in your phone, your solar panels, your electric car. The demand is relentless and growing, but the price? It's been suppressed, held down by a complex web of paper contracts, derivatives, and short selling on exchanges like the COMEX. Think of it like a giant beach ball being held underwater. Industrial demand keeps pushing it up, while paper market shenanigans keep pushing it down. But you can only hold that ball down for so long before it shoots out of the water with incredible force. That $80 spike we're talking about? That's the beach ball rocketing into the air. So, what could trigger such a dramatic event? It's a perfect storm brewing on multiple fronts. First, we have the supply-demand fundamentals. For the past few years, we've been in a silver deficit, meaning we are consuming more silver than we are mining. Major mining reports and institutions like the Silver Institute have confirmed this trend. Inventories at major exchanges like the London Bullion Market Association and the COMEX are being drained at an alarming rate. We're talking about registered silver, the actual physical metal available for delivery, hitting multi-year, even decade-long lows. When the physical metal runs out, the paper game is over. There's nothing left to back up the promises. Then you add the geopolitical layer. Nations are diversifying away from the US dollar. BRICS countries, for instance, are accumulating gold at a record pace. While gold gets the headlines, silver often follows in its footsteps as poor man's gold. A loss of faith in fiat currencies naturally drives people toward tangible assets, and silver is one of the most accessible and historic forms of real money. Any major escalation in global conflict or a significant move away from the dollar could be the spark that ignites the silver rocket fuel. People will rush to safety, and physical silver will be at the top of their shopping list. This isn't just speculation, it's a historical pattern. Now, let's talk about the emergency meeting part of our headline. If silver were to gap up from, say, $30 to $80 overnight or in a single week, it would cause absolute chaos. This wouldn't be a normal market move, it would be a system failure. The entities who are massively short silver, meaning they've bet on the price going down, would face catastrophic losses. We're talking about major banks and financial institutions. Their losses would be so immense they could threaten the stability of the entire financial system, creating a cascade of defaults. This is what's known as a black swan event. In this scenario, regulators, central banks, and exchange officials would have no choice but to call an emergency meeting. What would they do in that meeting? They'd likely halt trading. They might declare a force majeure, an unforeseeable circumstance that prevents them from fulfilling a contract. They could even decide to settle all remaining silver contracts in cash, not physical metal. Why? Because the metal simply wouldn't be there to deliver. Imagine you bought a contract for 1,000 ounces of silver, and when you ask for delivery, they say, "Sorry, we don't have it. Here's some cash instead." This would be the moment the paper market officially breaks from the physical market. The price on the screen would become irrelevant. The real price of silver would be whatever someone on the street is willing to pay for an actual physical ounce. And trust me, it would be a lot more than $80. This scenario isn't without precedent. We saw a mini version of this with the silver squeeze movement in 2021, driven by retail investors. They put a significant dent in the system and exposed its vulnerabilities. Now imagine that movement, but 10 times bigger, amplified by institutional investors, and even nations who see the writing on the wall. The pressure is building. The physical demand from the green energy transition and technology sectors is non-negotiable. You can't print more silver. You have to dig it out of the ground, and we're not finding major new discoveries. So the supply is constrained while the demand is exploding. That is the fundamental recipe for a price supernova. So, who are the players to watch? On one side, you have the industrial users who need silver at any cost to build their products. You have the growing number of retail investors, often called silver stackers, who are diligently converting their cash into physical coins and bars, draining supply from the market 1 ounce at a time. And increasingly, you have larger funds and family offices who understand the asymmetry of the trade. On the other side, you have the bullion banks, the big players who have benefited for decades from suppressing the price through paper derivatives. They are holding a massive short position, and they are now caught between a rock and a hard place. Every dollar that silver goes up costs them billions. The $80 figure isn't just pulled from thin air. Many analysts believe the true inflation-adjusted high for silver, based on its 1980 peak, is well over $100 or even $200. So $80 isn't the ceiling. It's just the point where the system would likely break and trigger those emergency interventions. It's the panic point. The moment the shorts can no longer cover their positions and the scramble for physical metal becomes a full-blown stampede. It would be a moment of wealth transfer unlike anything we've seen in our lifetimes, from those holding paper promises to those holding the real thing. Now, I have to be clear. This is a potential scenario, not a guaranteed prophecy. Timing the market is impossible. This could happen next week, next year, or 5 years from now, but the underlying conditions are undeniable. The physical market is tightening, demand is rising, and faith in the paper-based financial system is waning. The pressure cooker is hissing, and it's only a matter of time before the lid blows off. The key takeaway is to understand the fragility of the current system and the incredible potential of real, tangible assets in a world of digital and paper promises. The panic in the silver market might start with an $80 spike, but where it ends is anyone's guess. It's a story that is still being written. What can you do? This isn't financial advice, but it's about education. Research the difference between physical silver and paper silver, like ETFs or futures contracts. Understand the historical role of silver as money. Look at the supply and demand charts for yourself. The information is all out there. The more you understand the fundamentals, the less you'll be swayed by the day-to-day noise, and the more prepared you'll be for the volatility that is almost certainly coming. This isn't just an investment. For many, it's insurance against a failing financial system. And as the events we've discussed today get closer to reality, that insurance could become priceless. Thank you so much for joining me today to explore this explosive topic. It's a fascinating and critical story to follow. What are your thoughts on a potential silver spike? Do you think $80 is possible? Let me know down in the comments. I read every single one. If you got any value from this video, please hit that like button and make sure you're subscribed with the notification bell turned on so you don't miss our future deep dives. Until next time, stay informed and stay prepared. Thanks for watching.